What is going on, guys? So this should be a fairly quick video. I just wanted to show you guys something interesting, whether you have heard or seen me, whatever, say it before, right? With regards to where the banks put their money, or actually where the banks put your money whenever, you put your money into the banks, right? I just wanted to show you guys exactly, exactly, I guess, how much of the bank's money goes into life insurance, right? Life insurance assets, okay? And then, of course, explain once again why that is, and why is it such a good idea for them? Why do the banks need life insurance, right? Why do the banks put money in their life insurance? So I'm gonna go ahead and share my screen here. All right, so if you go to fdic.gov website, right, this is all public information. You can go in here, go make your way to the bank's data and such, right? So you can see here, I have Bank of America pulled up, their assets and liabilities, and it goes up to just the end of last year, right? And then they can also compare 2019 and 2020, okay? So assets and liabilities, all right. So if you scroll down to item 41, life insurance assets, how much do they have in life insurance? You can see that, hey, I mean, it definitely went up from 2019, right? You can see the number is, almost 23 million. But if you go up here, scroll up, you can see that, hey, dollar figures are in thousands, thousands. So you need to add 3 more zeros to the end of that. So this where is it, 23 million is actually 23 billion with a B, all right? 23 billion dollars in life insurance assets. But hey, let's go look at another popular asset class, right? The real estate. What do they have in real estate? So in this case, it is items 10 and 11, bank premises and fixed assets, which bank premises is really also there, like furniture and fixtures and all that stuff, right? But hey, they count that, okay? Um, and other real estate owned, right? So you can see that there is just a little bit over 19.5 billion, right? That's it. It's less than their life insurance. And why is that? Now, let's go ahead and look at another popular bank, Wells Fargo. Okay, let's look at Wells Fargo Bank, right? Um, and let's look at their real estate. So real estate, they've got, what is that, about 11.4 ish, right? So a little bit over 11.4 billion. Now look at their life insurance. 19.3 billion, right? Once again, more than the real estate. So why is it that these banks have more money in their life insurance than they do for real estate, right? Why? Because it's the best asset class. That's why. Simple. Simple as that. It meets all the criteria for the best financial vehicle that you can have. Okay. So I prepared a little PowerPoint here. So let's go ahead and show you this, right? One, okay. Advantage number one of life insurance, you have better growth rates, right? Once again, I made a post about, hey, bypassing the banks, right? Go put your money where the banks put their money, right? You have competitive returns from low risk or risk off assets. Okay. So you're getting a lot better returns than you would be in your regular old savings account, right? Or certificates of deposits and bonds. And then these life insurance policies can also be structured, or really are structured already automatically, for zero market risk. So you have only steady growth year after year with really virtually no worries of market crash effects. Okay. Nada, zero. You can really only go up with these policies, right? You've got both the safety of the bank, okay, and the growth of the market. right, at your fingertips with a life insurance policy, right? Advantage number 2, tax-deferred growth, right? So everyone is all about these 401ks and IRAs, or maybe even the Roths, right? Now, hey, you can have tax-deferred growth in a life insurance policy as well. The government does not tax the growth in a cash value life insurance policy. Why? Because life insurance is a social good for society, right? When somebody passes away and leaves a widow or orphans, right, to fend for themselves, right? If they have the life insurance and were responsible and made sure that they were covered, okay, and their family's financial future was secured, right, they would not need any government assistance, okay, or government welfare. Therefore, the government incentivizes people to fund permanent life insurance policies, right? So go do it. Okay. Not only is it good for your family, but hey, it's good for the government as well. Okay. Because they're not having to give handouts all the time. Right. Number 3, the liquidity and access of your money. So you can access your cash surrender value, right? You can access a tax-free policy loan against your cash value life insurance policy, which maintains participation of your money so that it can continue having cash value growth, right? And there's also no credit checks or waits when you're getting a policy loan. And you can access your money anytime and for any reason, okay? You're not getting get penalized or anything for it. Advantage number 4, you have key person protection, right? So you get death benefits, right? The family is getting a death benefit that is paid to them income tax free, right? You're getting living benefits also. So a lot of insurance companies nowadays are providing living benefits along with their policies. So living benefits are now available through certain companies for chronic, critical, and or terminal illness or injury, income tax free. So that can provide an income and asset protection for small businesses and you and your family. Okay, so you don't have to worry about how your bills are going to be paid if you can't work due to some sort of disability or illness or disorder that you just randomly happen to get. Okay. Advantage number 5, you have high contribution limits based on the amount of insurance that you have, right? These are much higher caps than the 401ks and IRAs and the Roths. Okay, so now you have more safe tax deferred growth year after year. Keyword there is safe. Right? You also have the safe tax deferred growth year after year, unlike the 401ks, IRAs, and the Roth, in which your growth is not safe. Right? And there's no restrictions on high income earners. Okay, again, that's also based on the amount of insurance tied to it. But again, you have way more upside, right? Way more upside because you have to look at what it does, not what it is, right? Death benefits, living benefits, and the cash value, liquidity, safety, rate of return, and tax advantages. Okay, that is what you get with cash value life insurance. That is why these banks have so much money in life insurance assets, right? And that is where they put a lot of their money. So that is something that you can do for yourself. And the question is, why not? What's stopping you? What is stopping you from getting more educated about it, getting more information, and instead of putting all of your money in the bank, right? I wouldn't agree with putting all of your money into life insurance, but that's available for you to diversify even more than just putting all of your money into the banks and trying to get rich quick in the stock market, right? Or tying up a lot of your money in real estate also. Okay, so I hope this was a little bit of eye-opening for you, and I hope that you learned a little bit more, and I hope you keep it in mind to reach out to myself and my team, or really any life insurance agent. Okay. And just become more empowered to take care of your own finances for you and your family. Right. I hope you guys enjoyed this video. Right. And have a good day.